as you know, value stock with high growth potential is very difficult to combine. So with all of this information, I assume it's publicly available. So what is the market missing? Why is it so undervalued? If all of these are right, correct, and so true, and the company is so good with high growth, why is the market not pricing that in?
So why is it not trading at its fundamental level when everything is that good?
Right.
Yeah, basically, as you saw, the fundamentals are strong, and the company is held by top institutions, JP Morgan Asset Management, Fidelity, BlackRock, and they obviously know that the company is worth something. But the problem here is that there are some liquidity problems which really impede the market price to converge with the fundamental price. And basically there is not much trade happening which would narrow down this gap. But we think that the situation will change in the future because we've seen some movements. If, say, prior to this year, the institutions I mentioned, they just helped the company receiving their dividends and holding their shares. Now they started to move their shareholdings, and we think that this will continue, and the trades will go up hopefully, which will enable the fundamental value and the market value to sort of come closer to each other in the future.
So if I were to buy it, my only hope would be that I wait for big banks to turn the stocks around. That's my hope of buying the stocks.
On the one hand, yeah, but yeah, there is some risk, right? That this might not happen, and this might make you worried. But in this case, you are provided with sort of cushion, right? You buy it in the company, and you for sure have high dividends, which will provide you with quite a stable and solid return. Even if the prices do not converge in the short run, you definitely will have some cushion, some return, which will be pretty handsome.
How do you explain the 30% drop in price?
It happened recently. Again, this is because all of the liquidity. Because on the operational side, on the fundamental side, nothing has changed since the company went public. Fundamentally, the company is very strong. They have very attractive projects, very strong project pipeline. But again, this liquidity, in our view, puts some pressure on the stock because it makes it a bit risky to investors, and they require additional discount. And probably that's why the share price goes down.
I would like to add to Rasul, he's absolutely right. But now all the Russian market is declining a little. However, we know on statistics that when GDP growth is declining a little, the infrastructure, construction expenditures are growing in Russia because it's a national priority for us.
One of the key themes in this kind of company, infrastructure, is sales based on fixed price contracts. What do you think of this?
Can you repeat the question?
Fixed sales based on fixed price contracts, so like long-term contracts, and you cannot really renegotiate the price. So it does affect profitability. What do you think of this?
I can answer this question. Most enterprises have a lot of expertise in different sectors of infrastructure construction and have also a general contractor expertise. It gives a part of contracts to its subcontractors, and the most profitable it takes to it. To round its major risk about what to say about fixed contract.
But how do we hedge this risk?
Thank you, May, and what you said. Coming back to the fixed price of the contracts, yes, there is some risk that you get some fixed amount of money, but the cost might vary.
Basically inflation.
Yeah. But the company has at least two factors that do help it to sort of hedge this, to sort of smooth this risk. First, they have their own production capacities, which enable it to handle the inflation in materials up to 14%, according to management. So any inflation up to 40% will not put any significant pressure on their margins. And in addition to this, they have a very strong project assessment team, which right in the beginning of the contract, the tendering process, can they can assess the project proposals and the future expenses with quite a lot of confidence, which allows them to sort of bid knowing what they're bidding for.
Do you think that 14% is a reasonable target? I mean, if you think you are hedged up to 14%, do you think it's okay?
Well, at least if it's better than nothing. But we've rarely seen inflation in materials going up to 14%, at least in Russia.
Steel actually is much more. Steel can increase much more than 14%, 30% or 10 days.
But it might definitely, but nevertheless, at least they can take a good portion of the damage.
And also, it's one of the competitive advantages of in our market. I mean, it has 40% of its production, and it's one of competitive advantages in infrastructure construction.
May just add to the inflation thing. According to Russian law, even on the fixed price contracts, if inflation goes too high, there might be some renegotiation of the terms, so that the companies are they're sort of again hedged from too high inflation.
How do you rate the sale of ETS and buy into TSM?
So I can answer this question. So ETS and TSM were bought in 2010. This merger has enabled Moscow to gain access to other markets. It was a geographical exposure to Far East and Siberia. And also ETS and TSM have expertise in other sectors where Moscow didn't have expertise, like ports and airports construction. I must say that Moscow is a fundamentally bridge and road construction company, and with these mergers, it has acquired access to other markets and to other segments of the market.
Can I just think Monica was absolutely right. When Moscow bought ETS, which is basically a pure general contractor, they could enhance their general contracting expertise. And having worked together, like in a combination for 2 years, Moscow could learn these competencies and then sold the ETS because they have the general contracting competencies already, so there's no point in holding it anymore. So they sold their stake, but as you said, they increased their stake in TSM, which basically has a very strong technological expertise, and which is in line with the long-run strategy of the company. So we rate this mergers, this sale and this purchase and sale of stakes in these companies is very positive.
And do you think the sell-off in the stock may be related to that move? Yeah, in part I agree, it's liquidity-driven, but probably it's just after this reorganization that the stock just fell off a cliff.
Yeah, we agree because it might be related because when investors hear that a great portion of the company has been sold, they might be concerned about what will be the consequences for the company, because ETS had some attractive projects, and when we sell this company, the investors might think, how is it going to affect the overall project pipeline? And probably that was something behavioral which prompted the investors to sort of overvalue the company.
Let's be specific. What share of the backlog was lost with the sale of the ETS?
We cannot be very specific on that, but as we know, ETS had large projects in Sochi, which are basically already completed, almost completed. So most of it at the same time didn't lose very much. If they sold it 2 years ago, they would lose a lot, because the projects were new then, but they could complete them them, and by this time,
Thank you very much.
there was a much more.